Hello and welcome to another edition of our ETF Insights series, where we chat with innovative leaders from the ETF and digital assets ecosystem. Today I'm really delighted to be joined by Wim van Zwol, who is head of Benelux and the Nordics for Vanguard. And Wim is joining us for a special part series that we're doing with Vanguard, where we're providing a deep dive into the distribution nuances in the ETF market for various countries in Europe. So Wim, it was great to have you here. As we know, there's obviously a lot of cultural differences, between various markets in Europe. Can you tell us a bit about, since we're doing a deep dive for Netherlands for this particular video, can you give us a little bit of color on how are the Dutch investors different in terms of culturally from like a market like the UK or Italy or Germany, for example?
Yeah, thanks, Andrea, and thanks for having me here. One obvious, I guess, characteristic of the Dutch market is that we've had a ban on retrocessions for quite a while. So very similar to in the UK, the retail distribution reviews or RDR, we have a similar ban here, which means that advice is independent in nature, right? There are no hidden costs or kickbacks, etc. So that's a really good market dynamic we have, right? Vanguard has always been a big proponent of that, to have a, let's say, more independent advice and good choice for investors. And I guess the other dynamic is that we've got a really strong pension fund market, a large one, right? So which traditionally is defined benefits, so very guaranteed. But we also live at a time where we realize that, guarantees are very expensive. And risks are being gradually transferred to the individual. So that means that at Vanguard we see a responsibility to educate, the public, and also people are discovering investing on their own accounts, let's say, in the past years. So that's a good trend, and we try to support that with very accessible, low-cost products, as well as investor education through advisors, etc.
And you mentioned products. So what ETFs are you seeing resonate most right now with Dutch investors? Or even, I know obviously there's a lot of volatility in the market. So even if you wanted to talk about something before the volatility, I know there's a lot of choppiness going on.
Yes, I mean, there's a whole range of investor types that use our ETFs, right? So it varies from the very large institutions that might use ETFs for very specific exposures, etc. Say maybe an S&P 500 or something like that, or North American equities, what can grow in large sizes, to, let's say, the other extremes are maybe the most diversified global products, etc. For smaller investors, and you can basically see the commonality in all these products we offer is that we try to keep them as diversified as possible. So you won't find very niche focused, maybe, for individual small sectors or country combinations for the latest hype. You won't find that at Vanguard. We try to focus on the long-term durable investment themes, and that resonates very, very well. So we attract the right audience that agree with this philosophy to keep things simple, keep the cost low, stay disciplined, and basically invest for the long term. And ETFs fit in that category as well. Right, so people used to think ETFs are trading instruments, and of course you can trade them very easily. But at the same time, they're great instruments for long-term investors because the expenses are so low. So in a way, the product has democratized investing and makes our job to bring investing to the broad public easier.
Yeah, absolutely. And I know, earlier in the conversation, you had mentioned how the Netherlands no longer has retrocessions, making it a little bit easier accessibility for various, investors within the market. So obviously, one of the things that we're seeing across the board in Europe, particularly in markets like Germany, is that retail adoption is really picking up. What are you seeing in terms of Dutch investors and as it relates to retail market? Are you starting to see a little bit more picking up and through the education that Vanguard's providing and all?
Yes, I mean there's a couple of things happening at the same time. I would say that support, say, a broader retail investment base, right? I mean, we come from a background where we are very bank driven as a country, and all of Europe basically has that for good reasons. But at the same time, you can see, right, I mean, the EU is trying to create a better capital markets union, and there's lots of reasons why the individual should maybe also look a bit more what they can do themselves rather than the government can do for them. That's on the one side. At the other side, there's also technology these days. ETFs are an innovation, right? You could call that part of the technology. But at the same time, you see, for instance, low-cost called online banks, for instance. They've gotten a lot of traction throughout the years. And that combination basically makes that cost-efficient investing is accessible for basically anyone from very small amounts. So that means the opportunity is there, the possibility is there to open an account very easily and start investing. There are some risks to that, right? So in the start of COVID, you saw huge numbers of retail people, I think in the hundreds of thousands, opening investment accounts 2 years ago. At the same time, not all of them might be interested in the long-term investment. So there might be some lessons learned through that. And you do see some people, I guess, closing their accounts. But the bulk will remain and hopefully will get it, right? They will get it, what the benefits are of staying the course during market volatility. That's the message we always spread, right? We call this Vanguard weather. We are built for storms like this, and we just keep spreading that message, right? Focus on the things you can control. In the long run, I mean, you may have a bumpy ride, but in the long run, the expectations of a better outcome are there versus saving, which is big in Netherlands, right? Same as in Europe, but the interest rates are still 0.1%, even though they might be going up a little bit. And in real terms, I mean, with inflation, a saving account is will get you basically nowhere. So education is definitely needed, but also people seem to already move, and there is this big trend of the retail investor opening either direct accounts and getting the knowledge wherever they can, or through their advisors, which is another really important area where we can add value as a company, to work with advisors to explain to them the benefits of a cost-effective long-term approach, and for them to coach the individuals on investment behavior that we are all sensitive to, right? To read the newspaper and think, oh my God, I might have to sell everything tomorrow, and having someone to basically stop you from making these decisions adds a lot of value over time as well.
Working in this industry, and even working in this industry, Americans tend to, we check we're used to managing our own retirement accounts. I check it every day. Don't ask me why I do that, because I know I'm not supposed to do that. And I know I'm not, but it can be very hard, I imagine, to educate the individual who's not from our background to just white knuckle it. You'll be fine, because eventually it'll calm down. You need to stay the course.
We are all human, and we all have these emotions, and indeed, of course, I recognize checking the account, but there's also studies that at some point, if markets go down a little bit, people do check. If it goes down further, people also stop checking at some point, right? But it's better not to look and just stay the course and keep investing. Maybe monthly savings plans, those type of things are awesome to keep that discipline built into your system.
Yeah, absolutely. And so my final question is, again, you had mentioned the retrocessions being removed, and I know that that's a huge hurdle in a lot of other markets. What would you say in the Netherlands is right now one of the existing hurdles to ETF growth?
In general, let's say there is a bit of a fear to start with investing. Traditionally, investing might have been something for the older white males, right? The stereotype. So it's there's this stigma that had to be taken away. That is happening, right? So investing is of interest to the younger generations. You see lots of young people opening accounts, so that's great. And the obstacle now is, I guess, weathering this storm. Because if you've opened an account 2 years ago and now you're facing, let's say, a 20% drop of your portfolio, it's really hard, right? It's tough. Yeah. That's the one thing. And the other thing is there's this balance between the short term and the long term. You've got short term needs, which might be just paying your heating bill, right? In the current crisis with energy in Europe. So there's always these short term pressures. Well, at the same time, if you're smart, there's this long-term need to build up your buffers, right? Whether you're an individual or a pension fund for that matter, right? I mean, you need to have these long-term buffers and have the long-term plan. So making a good plan, staying the course, and then implementing in a say a sensible way, focusing on the things you can control, such as cost, etc. It sounds very simple, but it isn't in practice. But those are the classic hurdles, I would say.
Well, thank you so much, Wim. This is really helpful and very interesting insights. And for those of you who are watching, you can watch us again on our website, which is blackwatersearch.com. And thanks again, Wim, for your time. Appreciate it.
Thank you, Andrea. Thanks.